Well, so let us discuss the growth of Indian insurance sector. The topic of the day is growth of Indian insurance sector. India's insurance sector is projected to record the fastest growth among the G20 countries, with the total premium expected to rise at an average rate of 7.1% in the real term during 2024 to 28. In comparison, the growth rate for the global insurance market will be around 2.4%. So the expanding economy, growing middle class, innovation and regulatory support are driving the insurance market growth in India. In this period of 24 to 28, the life insurance business is expected to record 6.7% growth, backed by rising demand for term life insurance cover by the middle class income group or middle income group, you can say, and increased adoption of InsurTech. So meanwhile, the non-life segment is estimated to grow by 8.3% owing to economic growth, improvement in distribution channels, government support and a favorable regulatory environment, with health premiums forecasted to rise by 9.7%. So India's economic outlook also remains positive, with average annual real gross domestic product growth estimated to be 6.4% between 24 to 28. Our medium-term outlook remains positive, with average annual real GDP growth projected at 6.4% between 24 to 28. So that puts growth in India ahead of major emerging Asia economies such as China, that is 4.3%, and Indonesia 4.9%, emerging Asia excluding China 5.6%, and also emerging markets overall 3.7%. So meanwhile, for the 23-24 financial year, which has just completed, the growth in life insurance was good. And the awareness of the risk or insurance has increased during the pandemic period. So the non-life insurance industry is likely to dip to 7.7% from 9% due to high interest rate, elevated retail and medical inflation. But it has also increased now. So the overall insurance penetration in 23-24 increased to 4% from 3.82, and 6.5% globally. Penetration for life insurance in India for the year is projected to be 3%, and for non-life 1%. So along with an expanding economy and insurance market, India also has an increase in exposure to natural catastrophe, and the protection against these is very low. So according to the analysis by Swiss Re, 93% or 9.3% of the exposures are uninsured, And the major challenge faced in bridging the protection gap is limited awareness and perception of risks. So the economic losses due to natural disasters have been on an upward trend for many years, driven mainly by economic growth and rapid urbanizations. India's major cities have high population and asset valuation concentrations, and many are exposed to multiple natural hazards. So one challenge in bridging the large perception gap is limited awareness and perception of the risks. So the industry also faces challenges in underwriting with the need for more granular data on existing natural catastrophe exposures and establishing more robust modeling capabilities. The Insurance for All by 2047 initiative launched by the Insurance Regulatory and Development Authority of India in November 22, along with a robust economic growth, is expected to support the development and expansion of the insurance sector. Because if you see India's growth on year basis for in 24 is 5%. Emerging markets 6.60, emerging Asia excluding China 4.50, and globally it is 1.60. So that way the growth is bound. In June 2024, India's life insurance sector